Hi, this is Dan Miller. Thank you for joining me for this episode of Better Financial Living. Today I wanted to do a quick video on charitable giving. You know, we are here at the end of the year, and a lot of folks are thinking about the holidays. And then, of course, as I record this, it is December 2nd, and so it's just right around the corner. And I wanted to talk about this is a time when we all feel very wanting to give back to others. You know, it's been a tough year, and I hope that folks are doing that. I want to talk about just a couple quick ways that you can do your charitable giving. I will tell you, charitable giving is a little tougher than it used to be able to and still get a tax deduction for it because of the increase in the standard deduction due to the CARES Act, or excuse me, due to the Secure Act. But there are still some ways that you may want to consider that may be able to be tax advantageous to you in some manner, and that are qualified charitable deductions if you are over age 70 and a half. Bundling multiple year charitable gifts. You can also look at gifting assets and basis, and then also using your IRA or other tax qualified accounts in beneficiary designations to charitable organizations. So just quickly, qualified charitable distributions for those folks that are over 70 and a half, you are able to make charitable donations to qualifying charities directly from your IRA. Now, again, you need to talk with your tax and your financial professional exactly how to make that work so that there is a no taxable event for you in there, but there is some real benefits there to that. Bundling multi-year charitable gifts. As we know, the standard deduction is for a married filing jointly couple in 2020 is over $24,000, $26,000 almost. And so, and going forward, it'll grow even greater, excuse me. And so that does make bundling, or that does make making charitable getting a deduction for your charitable gifts a little more difficult. So therefore, you may want to look at bundling charitable gifts. 1 year doing so much, then maybe you skip a year, and then you do 2 years worth in the next year. You can do that just yourself, or you can also use things such as donor advised funds to do that. Also, then the other way you may want to consider is gifting assets with highly appreciated assets such as stock and things like that directly to a charity. So for example, if you have a stock in a non-qualified account that has a very low basis, and you know if you would sell it, you're going to have a substantial capital gain. Well, you're able, in most instances for qualified charities, they'll have an account that you can actually set up and donate that stock directly to the charity. All right, so now you've made a gift of that stock, and they get it at the value, at the appreciated value. You now do not have to claim the charitable, the capital gain, and also they receive it, and they don't have to claim the capital gain either. So they get it at their new basis. So it's a win-win for both of you. And then the other thing that you can consider is utilizing your IRAs and have your beneficiary designations go to utilize charities for your as part of your beneficiaries. Now, there's no benefit to you in the current year, but you will receive, or your estate will receive some benefit by not having to pay tax on those IRA gifts later on because they went to a charity as opposed to another heir of some sort. So just a few quick tips. And again, I know I went through them very, very quickly. If you want more information, please reach out to our office, reach out to your tax professional. Be happy to give you some more information about that. Thank you. Talk to you again.